Good morning, viewers. Welcome to ST Money's Morning News, your weekday business news channel. It's Thursday morning, December 12th, 2024, and I'm your host, Sunil Thakker. Sunny Talks Money. Let's roll. Investors' enthusiasm for US technology giants sent stocks higher on Wednesday, snapping a two-day slide after a benign inflation report cemented expectations that the Federal Reserve will keep cutting interest rates. A Labor Department report showed US consumer prices in November increased by the most in 7 months, though broadly in line with market expectations. Wall Street's benchmark S&P 500 index rose on Wednesday, and a rally in tech stocks lifted the Nasdaq above the 20,000 point milestone for the first time after a US inflation report boosted expectations of a Federal Reserve interest rate cut. But the Dow Jones Industrial Average dipped, dragged by health insurers as US lawmakers introduced a bill seen as crimping their profits. The moves came after the latest reading on the consumer price index showed prices rose 2.7% in the 12 months through November. That was right in line with consensus expectations and up from a 2.6% rate as of October. Core prices, which exclude volatile food and energy costs, were up 3.3%, also matching forecasts. The report from the US Bureau of Labor Statistics showed. While price pressures remain somewhat elevated, investors have grown more confident in recent weeks that central bankers will continue to lower rates. Wednesday's trading interest rate futures showed traders now view a cut of a quarter percentage point next week as a near certainty. The Dow Jones Industrial Average fell 99 points or 0.22% to 44,148. The S&P 500 gained 49 points or 0.82% to 6,084. And the Nasdaq Composite gained 347 points or 1.77% to close about 20,000 for the first time at 20,034. Five of the 11 major S&P 500 sectors advanced, led by gains in communication services, technology, and consumer discretionary services. Relieved investors flocked to tech stocks. Bets on AI and big tech stocks have supercharged the stock market in 2024, with the S&P 500 returning nearly 28% year to date. The index is on pace for back-to-back annual jumps of more than 20% for the first time since a 4 year stretch that ended in 1998. The so called Magnificent Seven were once again in the pole position with shares of Tesla Incorporated, Amazon.com Incorporated, and Facebook parent Meta Platforms Incorporated setting all time highs. Shares in Alphabet, the parent company of Google, rose more than 5% to record $195.40, while consumer staples like McDonald's dipped. Tesla shares climbed nearly 6% to a record high of 424 as the electric vehicle maker extended a rally in the wake of the US presidential election. Nvidia and other mega cap stocks, including Alphabet and Amazon, also finished higher, adding up to 5.5%. Shares in semiconductor supplier Broadcom rose more than 6% following reports that it was working with Apple on AI software to develop its first server chip specially designed for artificial intelligence. Meanwhile, Apple edged down 0.5%. The main reason why the Dow Jones Industrial Average edged lower in yesterday's trading as healthcare stocks flagged. Federal lawmakers are preparing to break up pharmacy benefit managers. Pharmacy benefit managers, including Cigna, CVS Health, and United Health Group, lost ground after bipartisan group of lawmakers introduced a bill that would force health insurers or drug middlemen to divest their pharmacy businesses. Shares of these three biggest such managers fell 5% or more. Healthcare is under bipartisan scrutiny, which is pretty horrendous. In other stocks, GameStop gained 7.5% after the video game retailer reported a profit for the third quarter on cost saving efforts. Macy's shed 0.8% after the department store bellwether cut its annual profit forecast as persistent weakness in demand clouded its expectations for the holiday shopping season. Benchmark Treasury yields retreated after the CPI data, then rebounded to close at 4.27%. On Tuesday, the 10-year yield settled at 4.219%. Bitcoin advanced, topping $100,000 again. It rose 4.5% to $101,318 yesterday. In commodities, West Texas Intermediate crude rose 2.5% to $70.30 a barrel. Spot gold also rose 0.8% to 2,717 an ounce. Only one key event remaining this week is the US initial jobless claims and PPI. That's for today. That's it for today, folks. I will see you again tomorrow morning. In the meantime, please do subscribe, share, and like this video. Thank you. Happy investing, stay inspired, and remember, it is all about money.